Welcome to part 1 of this course, Validating the Fintech Business Opportunity. The world of financial services is changing radically. Isn't it about time this happened? According to Bill Gates, this is a fantastic time to be entering the business world because a business is going to change more in the next 10 years than it has in the last 50. Think about it. Not so long ago, it was almost impossible for one person to start a bank, or an insurance company, or even a private equity company, unless you were lucky enough to have vast amounts of financial and human resources, and of course contacts in the right place. Because barriers to entry were so high, the incumbent players in financial services continued to enjoy dominance for hundreds of years without any challenge whatsoever. They controlled global finances and in the process made huge profits for themselves and their stakeholders. Smaller players could only play at the fringes, mainly as intermediaries, forced to further promote the businesses of the already bloated players, making them even bigger. The financial crisis of 2008, together with technological and societal changes, set the scene for what was to be an explosive growth in alternative models in financial services, both from the perspective of the financial services provider and the financial services consumer. Many alternative models emerged and continue to emerge today. Seemingly, the pent-up demand for innovation in financial services has broken through the floodgates, and disruptive innovation now seems unstoppable. Here are just some of the examples of new financial services business models that have emerged thus far. Number 1, marketplace lending, including peer-to-peer and peer-to-business lending. Number 2, equity crowdfunding. Number 3, alternative forms of invoice or real estate financing. Number 4, payment systems. Number 5, foreign exchange and other forms of remittance models. Number 6, innovative software to establish banks and other financial services firms to deal with risk and regulation. And number 7, developing an innovative platform for wealth management or trading. In part 2 of this course, we closely examine the different business models emerging in New Age finance. Admittedly, much of this innovation has been disruptive. In other words, it's entrepreneurs or aspiring entrepreneurs, perhaps working now as employees in the financial services sector, realizing a need for change because the status quo isn't working. These entrepreneurs break out and launch something that disrupts traditional finance and meet customer needs currently unmet by traditional players. For example, we all know how banks loathe lending to subprime personal and business customers. Financial innovation has closed this gap by putting borrowers directly in contact with private lenders, without any banks getting involved in such a transaction, except for being a facilitator of payments between the parties. This disruption caught the attention of mainstream financial services players and larger non-financial services players such as Amazon, who themselves started to explore new ways of doing things, either to bring operational efficiency, improve customer services, overcome regulatory barriers, or reach new market segments. Technological innovation is the common link in most of the disruption taking place in financial services. Hence, the term Fintech was born. Now, you may ask, is alternative finance Fintech? It doesn't have to be driven by technological innovation, but it usually is, and for convenience, we broadly include alternative finance within the definition of Fintech. We explored this definition in greater detail in part 1, so stay tuned. Fintech brings huge and exciting opportunities. The growth of this market is so phenomenal that you would be forgiven for thinking this is the next gold rush. Like all new ventures, however, launching a fintech business is not without its challenges. The biggest one, at least in my opinion, is regulation. Therefore, launching in the right way is really important, because what you don't want is, number one, a failed business launch. This could happen if you don't get regulatory approval where you need one. Number two, inadvertently breaking any law and getting into serious trouble because you were unfamiliar with regulatory requirements. Number three, delay in launching because you chose the wrong path or didn't follow the right sequence of steps. In this fast-growing market, any delays can have high opportunity costs and can also erode any competitive advantage from the start. Number four, launching the wrong business model or one that is commercially less viable. And number five, wasted costs because of inefficient or ineffective launch of your fintech business. On the other hand, if you plan well with full knowledge of the market, business models, and regulatory requirements, your fintech venture will be off to a great start, and you will be well on your way to building a high growth and sustainable financial services business. Awareness, knowledge, and proper planning brings the following benefit. Number one, absolute certainty on the most appropriate business model you should choose for the fastest growth, because you know what works and what doesn't. Number two, certainty of the launch, because you follow a tried and tested step-by-step approach. Number three, regulatory certainty, as you learn about any regulatory obstacles and how to overcome them before starting the business. Number four, speed to market, because you avoid any false or inefficient steps in the launch process. Number five, reduce costs, because you avoid inefficient or mistakes others have made along their way. In this three-part training course, I will help you understand the market and show you ways in which you can launch your regulated fintech and alternate finance business in the most efficient and effective way. I'd like to add that this content in this course is based on real-life case studies. So here's what I cover in these three lessons. In this lesson, we explore whether the fintech market is actually viable. I'll help you decide whether this market is worth pursuing, regardless of whether you are a startup or a global multinational looking to venture into the world of fintech. In lesson 2, we explore business models that you could choose for your entry into this market. Once you decide that this market is viable for you, I'll help you understand the market and pinpoint the specific business models that you could pursue. Oh, and by the way, we are keeping track of the fintech world through the Fintech Taxonomy map, which you can access as part of lesson 2. In lesson 3, we explore how to launch quickly and efficiently into the regulated fintech market. In this final lesson, I'll use a story to show you how things can go wrong, and hopefully this will provide valuable lessons for you to avoid the same scenario. I'll show you step by step how to successfully launch a fintech venture in the fastest and most effective way, regardless of whether you are going down the regulated or the unregulated path. So let's get started with part 1 of the 3-part course on regulated fintech, how to get started in the right way. So let's start by asking the question, is a fintech business viable? The fintech, including alternate finance sector, is attracting a lot of attention from venture capitalists. According to a 2015 Accenture study, quote, investments in financial technology or fintech companies grew by 201% globally in 2014, compared to 63% growth in overall venture capital investments, confirming this sector as a hot ticket, unquote. That's really interesting. If venture capital money is so aggressively chasing this sector, it seems like a market definitely worth exploring further. Some more research. A 2014 UK trade and investment study estimated that fintech market in the UK is worth approximately 20 billion in annual revenue, and it's growing fast. Surprisingly, only 80% of this revenue is however generated by the more disruptive fintech startups and small to medium-sized firms. A counterintuitive result indeed, as we have been associating fintech disruption with startups. Now, this assumption is indeed proving true for the alternative finance sector, which is a subsector of fintech. The alternative finance market, on the other hand, tends to be more dominated by startups. Now, make no mistakes, startups don't have to be micro bootstrap businesses. There are many well-funded entrepreneurs, ex-bankers, and other financial services professionals venturing in the space. There are also several traditional players venturing into this lucrative market segment. As a result, the alternative finance market is booming. In 2014, Nesta performed the most comprehensive study of its kind into the alternative finance sector, confirming this rapid growth. In 2012, the market was a mere £276 million, and it rapidly grew to £666 million in 2013, and a staggering £1.74 billion in 2014. Peer-to-business lending was the fastest growing segment, growing by 250% between 2012 and 2014. Peer-to-consumer lending followed next at a growth rate of 108%. Invoice trading grew by 174%, and equity crowdfunding by a staggering 410%. Nesta's research predicted this market to grow to £4.4 billion in UK by year-end 2015. While the US has one of the largest peer-to-peer lending markets in the world by volume, the UK market is 72% larger on a per capita basis, according to a research report by Business Insider in 2015. The alternative finance market in Europe reached nearly €3 billion in 2014, a 144% jump, and peer-to-peer business loan volume in France grew almost 4,000% to reach €8.2 million. Now, you may say that in the grand scheme of things, this market is still quite tiny compared to the size of the overall financial services market in the UK and the US. And I would fully agree with you. But can you find another market that is growing at the same rate? This explains why venture capitalists are so aggressively investing in this new market. Traditional players aren't sitting still though. They are supporting the fintech revolution by establishing accelerators and incubators and mentoring new startups. This is no noble cause though, because the traditional players are hoping to somehow leverage some form of benefit from all this investment. So I think there is a compelling evidence that the fintech market is definitely worth starting in or investing in. It's a very viable market, and in fact it's almost hard to believe the gigantic opportunity that lies ahead, regardless of whether you are considering a fintech startup venture or looking to expand your already existing financial or non-financial services business. So what's driving this massive growth in fintech? Let's take a closer look at the driving forces bringing about such disruptive change in financial services. Here are just some of the driving forces that we explore, and no doubt there'll be countless others. Number 1, the millennial or Generation Y, shaped by technology and the openness of social media, are now at a stage in their life where they need financial services products. The traditional models doesn't always work for them, and they are looking for alternatives that fit in with their thinking and lifestyle. Number 2, talented workers are starting out in this new sector, or indeed migrating to what they believe is a more open and entrepreneurial technology companies. They are choosing to explore a career outside traditional financial services. Surprisingly, a career in investment banking is no longer the ultimate dream of a college graduate. Number 3. Post-crisis, banks and other traditional financial services providers are reluctant to take on risk and therefore won't lend to risky borrowers. We all know the struggles many small and medium-sized businesses and first-time home buyers face in getting a loan through traditional channels. These borrowers will be forced to explore alternative channels. And number 4, technological innovation fueled by a more connected society, availability of information, and the ability to acquire and analyze big data. This is not only fueling alternative finance startups, but helping traditional players deliver better customer insight and experience. Number 5, especially in the UK, government drive and surprisingly a proactive and constructive regulator have helped to fuel alternative finance and fintech, making UK one of the most sought after destinations to start a disruptive financial services company. Starting out in fintech, you also have an opportunity to make a difference. Fintech is not only about high growth and the ability to generate profits. Startups in this young and innovative sector have a real opportunity to genuinely make a lasting contribution towards making financial services more transparent, efficient, and most importantly, bring access to finance where such access was unavailable within traditional finance. For example, the emergence of the peer-to-peer lending sector has helped to provide much-needed finance to high-risk consumers and has provided a more favorable alternative to the extortionate payday lender industry. Peer-to-business lending, on the other hand, has provided access to finance to countless of businesses unable to access traditional bank loans. Apart from access, these alternative financial players are also more efficient. For example, they can radically reduce the time taken to make a credit decision. The newly acquired loan helps small and medium-sized companies create jobs, spend, and invest, thus strengthening the overall economy. If you're a more traditional financial services player, you can still benefit from the fintech revolution. You have the opportunity to improve how you engage with your customers and, crucially, rebuild the trust lost in financial services as a result of the financial crisis. The financial crisis opened many people's eyes to how things could be done better in the financial services industry. This is particularly the case with many employed in the financial services industry. Up until recently, it was almost impossible for the man in the street to start their own bank or private equity company. Many small financial services firms were restricted to playing an intermediary role and couldn't establish a mainstream financial services business without vast resources and context in the right place. Innovation in financial services now reduces barriers to entry. Subject to regulatory restrictions, anyone can now start their own lending business and bring about the changes that they would have liked to see in the traditional financial services sector. But what about barriers to entry? A good question indeed, because despite how lucrative a market is, high barriers to entry often make it less viable or significantly increase cost of entry. In my opinion, there are only 3 fundamental barriers to launching into fintech. Number 1, capital, or the seed money needed to launch the business. This is, however, not an insurmountable barrier. Unlike traditional financial services businesses, such as banks or an insurer, fintech is a business that doesn't require expensive infrastructure, such as branches. So technology significantly drives down the cost of launching a fintech business. As we have already discovered, there is a sea of venture capital waiting to back the right fintech business. So an attractive business model won't find it hard to attract funding. Now with funding in hand, you can attract the right people on board to help start building your fintech venture. We've already seen that top talent is favoring this sector over and above more traditional businesses. So overall, we can conclude that capital doesn't seem to be a big barrier to entry in this market. The second barrier is technology. Fintech starts with technology. Technology that is used to enhance financial services. Without the right technology, you either won't be able to start your fintech venture or indeed start in a suboptimal way, possibly losing customer trust even before you get going. Some business ideas may also be complex, requiring proprietary and equally complex solutions. For example, algorithmic trading or blockchain solutions for cryptocurrencies. Again, we don't see this as a significant barrier to entry. With capital and talent and the right people driving the development of this technology, anything is possible. For tried and tested fintech businesses like crowdfunding or peer-to-peer lending, there are a vast number of high quality and proven white label solutions that can be purchased or licensed and plugged straight into your business model. So let's look at the third and final barrier, which are regulatory barriers. Remember, financial services is one of the most highly regulated industries. Certain business models will require a regulatory license before being able to start. This, in my opinion, is the biggest barrier to entry. Whilst the capital and technological barriers to entry can be measured on a scale, regulatory barriers are binary in nature. Either you get the regulatory license or you don't. If you don't, then you can't start a regulated fintech venture. It's as simple as that. In this case, you'd have to go back to the drawing board to see how you could launch in a segment of the fintech market that is not regulated. For example, adopting an exempt model. Now, even if you did get through the regulatory gateway by getting your license, you're still left with ensuring that you are compliant with the rules on a continuous basis. Any significant regulatory breaches can result in the business being closed down. However, this barrier can be overcome by developing the right regulatory mindset, fully understanding the regulations, and ensuring that you plan carefully to implement regulation in every business process. So we now come to the conclusion and we ask the question, is this market worth pursuing? 2008 crisis was a catalyst to disruptive change in the financial services sector. Technology and structural changes in financial services, as well as consumers' buying patterns, set the scene for an explosive growth in fintech and alternative finance. The growth was fueled by thousands of startups and indeed traditional players established fintech ventures. Excess supply of venture capital and talent further fueled this sector. Apart from regulation, there are significantly less barriers to entry at this stage in the process. So, in conclusion, it looks like this market is certainly worth pursuing. In the next lesson, we examine the definition of fintech and present to you various business models available for you to pursue in launching your fintech venture. I promise you that this is going to be an exciting lesson, as you will get a snapshot of the entire market in one lesson. This information will help you pinpoint the exact model that is suitable for you. But more importantly, by understanding the landscape, you will be able to choose a business model that has the highest potential for the fastest growth. So stay tuned. Look out in your inbox for part 2 of this 3-part series.